Hey everyone, I'm Jerry Massasak. I'm an advisor and tax strategist here at W.A. Smith Financial. Recently reading an article on Yahoo that dealt with the challenges that entrepreneurs face, especially as they're planning for retirement. And I'd like to share some of the insights that I might have through my 30-plus year career on what those might be and how to maybe incorporate those into your retirement planning. And before I get into that, though, if you would be so kind to hit the subscribe button, and it's going to help us reach a lot more people like you that are looking for this kind of help. So the article is titled Retirement Planning for Entrepreneurs, 4 Considerations, again in Yahoo Finance. And the article really dealt with a lot of the retirement plan options, which super important for sure. I think there's one that's very underutilized, and I'm going to share that with you here. You've got simple IRAs, you've got SEP IRAs, you've got traditional IRAs, you got Roth IRAs. You've got a lot of options as an individual in terms of what's available. But I think one of the most powerful ones that you could utilize now is the solo 401k. You can include a spouse as part of that solo 401k. The article actually mentions it. Specifically, you can't have employees. So if you have employees, then you're going to have to pivot off of this. So I'm talking to those people that are those one-man shows or one-woman shows and maybe a spouse as part of it as well. But the nice thing with that is the funding efficiency that allows you to have. And what do I mean by that? A lot of these other retirement plan options involve a percentage of income. So percentage of self-employment income, to be more specific, which is as you bucket your income and you figure out from a structure standpoint. And this is one of those things that, you really got to dive into and make sure you're structured properly. But it allows you to bucket out your income. And that self-employment income is what is used to determine what you're allowed to contribute. So if it's a percentage of, it's going to have to have more money to get the same dollar amount. A 401k, it's a straight dollar amount. So you could pay yourself $30,000 and put $23,000 into a 401k. Super tax efficient. That would be, and again, you're looking at, hey, what's available? So usually very cost efficient as well. So solo 401k, underutilized retirement planning tool. So one of the challenges also has to do with the taxes, the tax consequences. So when you're thinking about a retirement plan, and this article does a great job, it reads, don't forget the tax consequences both while you save and when you withdraw the money from your retirement account. So what does that mean? That's basically saying, hey, am I doing it as a tax deferral? A traditional, taking a tax deduction for it, or am I going to do it as a Roth contribution? And if you think about a lot of small business owners, the income fluctuation that you have from year to year, if you got consistent income, it's a lot easier answer. But if you've got income fluctuation, which many small businesses do, this maybe gives you an option to say, hey, you know what? Shoot, I'm not getting the bang for my buck on my tax dollars, but if I contribute to a Roth, I get that tax-free growth component. So later on, when I'm taking this money out, it could be part of my plan in terms of how I'm going to retire and controlling your taxes ultimately. So super important to understand the tax consequences today and tomorrow. That's where having yourself a good advisory team and tax being part of that comprehensive plan for you, that's where that really comes into play, is looking at it today and tomorrow. Another good item that they bring up is the planning for risks, okay? And the article reads, as an entrepreneur who is likely familiar with handling risks, you shouldn't ignore the uncertainties that come from retirement planning. So again, this comes back to, hey, you may need that money in a different manner this year because I don't have the dollars to contribute to it. So you want to have a flexible retirement planning strategy as it relates to those assets in those plans, the 401ks, the SEPs, and the simple IRAs. So you want to make sure it's not something that you're strapped into that you have to do on an annual basis, because there are retirement planning vehicles out there that kind of push you into a corner. So you want to avoid that so that you've got that flexibility for the risks that you're going to have along the way. Another item that I'd like to bring up is part of your retirement planning is actually the business. So the business component of your overall portfolio will be a part of your retirement. How you sell that business, the value of that business. Value a lot of times, and I get this question an awful lot, how does that work? Well, ultimately the value is whatever somebody wants to pay for it, right? But there is some math behind it. There's asset methods. There's an EBITDA, which is earnings before interest, taxes, depreciation, and amortization, times a multiplier. That multiplier changes by the industry. So it's important that you have somebody that understands your industry and so you can make sure that you're getting maximum value for your business ultimately. How you structure the sale is going to matter. Do you have the tax efficiency behind how it's going to be funded? Is it going to be an internal person? There's so many decisions that revolve around that part of your retirement planning, but that business component of it can't be ignored because it really is part of your retirement. It's no different. You're investing your money into that business. No difference than if you're investing your money into a stock of another company. It's just that this is your company. So you want to make sure that you're maximizing the value and you want to make sure when the time comes, you have the proper succession plan. And that's one of those things that gets missed most often. And when you don't do it, you get pushed into a corner a lot of times and you will not maximize the value ultimately of what your business is worth because you didn't do that succession planning. So let's focus on you individuals that are in the FIRE movement. The financial independence, retire early. So how do you accomplish that, right? Well, I'm going to tell you, you got to build your retirement asset base. That includes your 401ks and your SEPs and your SIMPLEs and those types of retirement plans. You got to have a succession plan. You better know how you're going to exit out of your business in order for you to maximize the value of that business. So you need to be thinking about that. I won't say from day one, but almost day one. The third thing is you're going to need to maximize the value of your business through growing your business. So you're going to be reinvesting some of your money into your business. So you want to be really smart with putting the right money in your business. For instance, what should you spend on advertising? Things like that. How much should you put into your retirement account? Am I paying too much in taxes? Do I need a better deduction? Those are items from the business planning standpoint that you better have a bow wrapped around. And then how can you get income ultimately? And based on your age, there's different avenues, but should you be buying real estate? Should you buy a building? That could be a potentially great passive income flow for you. So, those are the things that you really need to be focused on, especially if you're in that FIRE group, that financial independence, retire early. So hopefully that helped you out. If you've got any questions at all, drop them in the comments. Please like, share, and subscribe. And in the meantime, I'll see you next time.